time now to welcome on board Mr. M.K. Dhanuka, the Managing Director at Dhanuka Agritech, on the show to talk to us about their earnings. Hi, Mr. Dhanuka. Good to be speaking with you. Volume growth of 39%, value growth of 33% means that the growth has been strong. Are you looking at increasing your overall revenue guidance then? Because it was close to 18 to 20% that you had guided for full year. Could you better that?
So monsoon and the first quarter June was a good monsoon expectation, but unfortunately in the 1st July to 25th July the monsoon was not up to the mark. Somewhere it was no rains and somewhere it was excessive rain, because of which floods came, which has impacted the consumption of especially herbicides. So July month has not been good for the industry and the company, and herbicides which were placed in the first quarter, some herbicides are coming back as goods return. So that's why we are continuing with our earlier forecast of 18 to 20% growth in the top line.
Dhanuka, you had indicated to us you were expecting a solid Q1, but of course, perhaps it got a bit shaken because of the factors you're seeing. But I want to understand the story for the full year FY25 remains intact, or is it also under dark clouds? You had said that 25 will be much stronger than 24. Does that stay on course?
Yeah, that's why I'm saying in 24 we had only 3% growth in the top line, while for the 25 we are talking 18 to 20% growth in the top line. So that's why 25 is going to be a fantastic year for the industry and Dhanuka.
While the revenue growth will be strong, you are expecting some pressure on the margins, right? Because in Q1 as well, the margins dropped to 15% versus 22% that we had seen a few quarters ago. You are declining on a full year basis. You are guiding on a full year basis as well that there could be a decline. Explain to us that.
No, you see, if you compare the margins for the first quarter in comparison to the first quarter of last year, the margin has improved. But definitely the overall margins for the whole year, we have given guidance of 100 bips degrowth in the margins, in EBITDA margins. So we are continuing with our guidance of 100 bips degrowth in the margins for the whole year.
Pipeline looking for new products, new molecules, etc.
Yeah, 2 molecules we are going to launch in the coming quarter, and 1 molecule we hope to launch in the third quarter, which is a paddy herbicide. So we hope to launch 3 molecules in the next 6 months.
Okay, so that's the latest coming in as far as Dhanuka Agri is concerned. Just a quick word as far as the Dahej plant is concerned. Are you expecting the break even on that one soon, and any other further capacities which are coming up?
No, not right now, but we are going to start production of another molecule from the Dahej plant, and break even it will take another 2 years time, because initially the capacity utilization is not there, and we are depending mainly on exports, for which you need the registration, and we are in the process of getting our technical registration in various countries. So once we get the registration, then we will be able to make exports of from our Dahej plant. And in export, you get the better realization in comparison to the domestic market. So that's why we hope that it will take another 2 years to break even in the Dahej plant.
Thank you so much, Mr. Dhanuka, for making time and speaking with us.